Thank you everyone for joining us today at our first ever live session as part of the Digital Asset Trading and Technology series. I'm really excited about today's panel. We're going to explore the role of Prime Brokerage in maturing digital asset markets and really look at some of the tools that are being put into place amidst this latest wave of institutional adoption. My name is Alyssa Ostrov. I'm the Chief of Staff at CryptoCompare. We've partnered with BlockFills to put on this three-part series, which is going to run every other Thursday over the next few weeks, with our next session on institutional mining coming up on April 22nd, and a third session on asset management that will take place on the 6th of May. So we'll be announcing speakers shortly for those sessions. Please sign up if you haven't done so already. You can use the Zoom link that you used for this session to get an all access pass across the series. I do want to take a quick moment and just highlight our partner for this series, BlockFills. They are such a wonderful team to work with and really making waves in advancing the digital asset prime brokerage model. For those of you guys that aren't familiar with them, BlockFills is a global financial services, technology, and trading firm in the digital asset space. They were the first electronic off-exchange digital asset liquidity provider and prime brokerage, operating using an electronic communication network model. Their platform performs order matching, execution, and routing for 500 plus institutions in 50 countries. And in addition to BlockFills, we have some excellent panels lined up today from BNY Mellon, Fireblocks, and Binance US. Moderating today's discussion, I have the pleasure to introduce James Bennett, who is the CEO of ByteTree, a leading provider of on-chain crypto asset data to institutional investors. I'll leave James to introduce the rest of our panelists, but I do want to remind everyone it's a live discussion, so we'll be taking questions throughout. If you do have questions for the panelists, you can use the Q&A function at the bottom of your screens, and James will be setting some time aside at the end to go through those as well. So again, thank you so much for joining today, and I'll now turn things over to James to kick off our discussion.
Brilliant. Thank you very much, Alyssa, and welcome everyone. So today we're going to be talking around prime brokerage services in the crypto markets. Where is the demand for prime services coming from? What are the challenges unique to this industry, and how are we solving them with innovative technologies? So as Alyssa said, a little bit of housekeeping. The panel will last for about 50 minutes. We will take questions from the audience at the end, and you can pop a question in the Q&A box at the bottom of your screen. Okay, so before we dive into it, let's introduce our panelists. So we have the pleasure of, first of all, Lory Kehoe, who is the Director of Digital Assets and Blockchain at the Bank of New York Mellon. Bank of New York Mellon is one of the oldest and largest custodian banks in the world, with over $40 trillion under custody. Earlier this year, they announced their move into digital assets, offering Bitcoin custody to their clients, as well as making an investment into Fireblocks' Series C round. So we do also have the pleasure of having Michael Shaulov, who is the CEO and co-founder of Fireblocks, a rapidly growing platform to store, transfer, and issue digital assets. Fireblocks have completed over $400 billion in digital asset transfers and advise multiple top-tier banks on securing and transferring digital assets. We have Rena, Shah, who is the head of operations and business development at Binance US. Binance US was launched in September 2019 and is a digital asset marketplace powered by the same matching engine and wallet technologies licensed from the world's largest crypto exchange, Binance. In less than 2 years, they have established a strong presence in the US, growing volume and users by 20 times. Last but very much not least, we have Neil Van Huis, who is a partner and director of trading at BlockFills, a global financial services technology and trading firm that provide electronic order matching, smart order routing, and trade reconciliation solutions. So we are very lucky to have these wonderful panelists with us today. And so without further ado, let's kick off by asking Lory, if you can kick us off, please, by telling us what a prime brokerage typically does, and who are the types of clients that are demanding Prime services in the crypto market?
Yeah, look, I'm delighted to James, and great to be here with everybody. So ultimately in the prime brokerage space, it's a bundle of services as the definition goes. It's where there may be bespoke services required by a hedge fund or a set of hedge funds, or even family offices, the case may be, where they require securities lending services, they require cash or cash management services, but also even reporting and data and analytics. And it might be a combination of all of those things together, which is created and bundled up and sold to one specific client, depending on how big and how vast their needs are. So it can be quite a specialized and bespoke service depending on the specific needs of the hedge fund. And so from a crypto perspective, it really is very similar to that. It may be, from a cash management perspective, that might be a core requirement, as well as, I guess, liquidity being another.
Brilliant. And you're talking about these services being very sort of demand led, which is of course very important. So you guys have made this big announcement earlier this year that you're going to start participating in Bitcoin custody and maybe even other assets. So I'm assuming that the demand is now coming from your clients. How have you seen their approach towards, speaking about crypto mature, like in the last 18 months or so?
Yeah, look, what would I say? I think on the back of some of the material announcements, I've seen attitudes and outlooks change, and in a very positive way. I think for me, Tesla's announcement and Elon Musk's work in that space in terms of the 1.5 billion purchase of Bitcoin, that was a really big deal, and it reached, I guess, the Treasury departments, not only in Silicon Valley and not only in tech companies, across all industries and sectors. I don't think I've spoken to as many Treasury folks in my life as I have over the past 3 months. And what I would say in terms of what I'm seeing from the conversations would be that there are the folks who hadn't dreamed of looking at, I guess, digital assets or crypto assets as a potential investment area in addition to cash. And then they saw that announcement and said, okay, we need to learn more. And so they've been picking up the phone to us, which has been great. And then the second school of thought, or the second camp, are the folks who already were or had a watching brief on digital assets, on Bitcoin, on Ether. And they were thinking, right, okay, now we need a partner to help us move into that space. And so, yeah, we've been really fortunate that they've been, I guess, picking up the phone to us, or dropping us an email, and then happy to chat as to, what our plans are to meet their needs on a fund accounting and admin level, which will be providing services in Q2, and then also at a custody level in Q4. So I think those two schools of thought, those definitely want to learn more, and now folks where actually now we want to act.
Okay, so I think it's very humble for you to say that you're fortunate they're coming to you. I think really they're fortunate that you are now opening to those services, because it's got to be a safe place, and certainly a well-established name. So, okay, accounting and custody are some of the client demands. Michael, I'd like to pass over to you at this point. I feel like you guys at Fireblocks have grown incredibly quickly. And now have a huge customer base. What are you seeing in terms of client demands, and how is that sort of changing and evolving?
Yeah, it's definitely changing and evolving. That's for sure. Because Lory here on the call is the big driver behind the changing and evolving. So we started Fireblocks about 3 years ago. One would argue in the worst timing that we could have started, because it was basically, I think, as we were building the product, the Bitcoin price was going from 15K to eventually like to 3.5K. When we, I think, went to market. Luckily enough for us, we really had the opportunity to partner with some of the best and most resilient sort of participants in the ecosystem. So actually BlockFills, I think, were probably our, third customer, right, that onboarded with us. So thanks, Neil, for all the support along the way. And also, like, others, like I think our first three was basically BlockFills, Genesis, and Galaxy, right? And also what we've done really well is that we've integrated a lot of different exchanges into what people define it as a custody offering, but I view basically the requirements in this space as slightly different, and I'll get to that in a second. But clearly Binance and other top tier exchanges, Binance US, were sort of in our network from day one. So I think that essentially Prime Brokerage in this space is going to be done, or it's actually being done in a slightly different way than it's done in traditional spaces. And I think that, BlockFills and some of the other venues are a great example of how people are looking into this. I think that everybody that basically are sort of crypto native or experienced trading firms, in the early days, or for the last 2 years, I think that they basically got accustomed to some form of, self-prime or prime services, in which solutions like Fireblocks, where you're essentially able to basically, put the custody and the rails in place, and then basically access market participants that provide you liquidity or liquidity aggregation, as people on the call, is sort of the way that you see a lot of the participants and the market participants are moving into. And definitely there is a question of how leverage is being obtained, which is sort of, so you have the custody, the settlement, the leverage, and the liquidity, right? So the leverage is usually being obtained through big, lenders like BlockFi and Celsius and, Nexo and Genesis Capital, of course, that provide a lot of the capacity to the bigger firms to basically take bigger and bigger positions on the exchanges. Now, I think for a lot of the participants, this is essentially the path that they took in the first 2 to 3 years of the market. But now, as we see more and more of the traditional folks and the traditional hedge funds moving in, then they are looking for more integrated solutions that are more similar to what we've seen in the traditional space. And I think it will be very interesting to see how this plays out, right? Because over the course of, I always joke that, like, Prime Brokerage is like was the race of 2020. There was so many companies that basically were coming in with a Prime Brokerage service, and I remember that was a specific call that we had with people from, I guess, to crypto native Prime Brokerage that announced it, and basically ask them, so what's going to happen when the incumbents, right, like Bank of New York Mellon, will come in and will basically offer a service in this space? Wouldn't that disrupt essentially how you're thinking about this? And I think that now that Bonnie and others are basically coming in, I think it's very clear that things are actually going to pivot. I mean, the bigger hedge funds, they need to rely on qualified custodians such as Bonnie to basically provide the custody, and they do need to, but also basically the liquidity and the settlements. Unfortunately, the way that the crypto market works is very different than the traditional space, right? So we cannot rely on DTCC or on other market functions that will provide centralized clearing. By definition, the way that the market operates, and Binance is a great example, is sort of a direct match between institutional flow and retail flow on the venue, right? So if Binance need to basically operate one leg, which is an institutional flow, but on the other leg, and maybe institutions are asking, hey, why can't we just clear every day at 4 p.m. and do it that way, right? The reason why we can't is because, on the other hand, you have retail users that can withdraw those funds every point in time, and the market structure need to be slightly different. So I think we are now in a very interesting moment in time that definitely, to summarize, that the bigger players are essentially coming in, and we basically starting to see this kind of pivoting in the market where we actually need to basically find a product market fit of this like prime brokerage kind of services, which on one hand fits much better into what the bigger hedge funds and the traditional players want to see, but on the other hand actually really takes advantage of what the crypto market has to offer from a settlement and clearing standpoint, because what we don't want to happen is eventually to end up in the famous Robinhood, DTCC, GameStop type of kind of situation, right? This is exactly what blockchain is designed to solve.
Absolutely, thank you for that. So it's you raise a really interesting point about settlement, which is there isn't a central sort of clearinghouse in crypto that administers the settlement of the trades, and we're talking about significant sums of money between, in many cases, regulated investors and institutional investors, professional investors. So this is a unique problem or challenge to crypto. How do you, and Neil, potentially this goes to you as well, I mean, how do you deal with that sort of settlement process using technology from this industry to solve that challenge?
Well, I think a number of things were brought up in Michael's discussion points that highlight the need for an institutionally focused product. As mentioned in previous points, we've got this like kind of retail dominated environment due to the fragmentation of liquidity and trading across geographies and exchanges. And so I think the point that has been made twice is that prime brokerage in digital assets might look a little bit different than prime brokerage in the traditional world, in the sense that we don't have a problem in our ecosystem letting someone settle at the end of the day at 4 o'clock, right? Because that's just something that seems normal to us. And I think that the difference between that solution and a solution on exchange is the idea of who you're interacting with and what participants you're interacting with. And so if you want to go and do an institutionally focused trade on a predominantly retail focused exchange, that is going to be a difficult thing to do unless you can have a prime services arm that essentially provides credit to everyone that's been involved in this type of transaction. That's typically very costly. It's not a capitally efficient thing to do. And so if you create an ecosystem that focuses on that type of participation, the capital efficiency is actually much easier to handle. And so I think what we're really trying to focus on is building a cohesive set of technology and a cohesive set of products or services that allow participants in the institutional or professional world to do just about as much as they'd like to do in the space in a seamless and compliant manner. And so I think that has to look a little bit different than the traditional capital markets, but that's a big reason why maybe a digital asset company like BlockFills maybe is disrupting that of the traditional futures clearing model, because those guys are not entering the space as one would have might expected. And so if you can use blockchain technology from companies like Fireblocks, and you can work with custodians and banks like Boni to accomplish some of the things that you're doing with other institutionally minded folks that are providing liquidity in your ecosystem, you can actually achieve a result that we're talking about. And so, we've been doing things like that for a couple of years. We've seen a tremendous amount of growth. But a lot of the things that we're hearing about next is, that full life cycle of trade execution, reconciliation, and reporting that's, seamless and cohesive and has a proper level of compliance and reporting that needs to be done at the hedge fund level or the, much larger participant level.
Okay, so Rena, we're talking a bit about this aggregation of different trade volumes. So, okay, this industry was largely retail led up until probably 2018, 2019, and now there's a strong institutional force coming through. And to some extent, is this liquidity all being pooled, and who is ultimately going to be the counterparty for institutional investors that are coming in to make trades?
Yeah, I think we're at a pretty interesting standpoint. So for Binance US in particular, we have a lot more retail flow than any other exchange because we have the lowest price point in America, right? So we are getting our first entrance of people doing their first couple $100s, couple thousand, and slowly aggregating larger positions to want to become high frequency traders. Similar to a Wall Street bet situation where people are pooling their own knowledge so that they can move the market together. On the flip side, you have kind of the institutional validation of every kind of entity or corporate structure adding some sort of line item to their balance sheet, whether it be Bitcoin or a different digital asset. This liquidity basically is all flexed against each other, right? On our side, we have all the retail coming, all these taker orders. However, our institutions are now going to be on our maker side making these orders. And it's a really interesting ecosystem that for once, they actually get to trade against each other. It's not an institution trading against an institution because there's no fun in that. They want these very attractive retail orders to trade against because they know that there are real people behind moving a market. So I'm pretty excited of where we're going with this.
It is really exciting. And then when we look, outside of just single exchanges, actually having this best execution or order routing, smart order routing from lots of different venues, is that ultimately what we're talking about when we're talking about Prime services? I don't have to just commit to one very appealing exchange, but actually I can have my pick of a selection.
Absolutely. This is already something that's just very common in traditional equities markets and for institutions. Now, retail should be also given the same choice. I want you to trade with Binance US, but I'm not going to hold it against you. If you find maybe a token that you want on a different exchange or an asset that you can't find on one, I think there is more power in the market of having flow go in and out of multiple exchanges, partially why solutions like Fireblocks and all of these movements of moving your funds left and right out of any exchange. That's the purpose of digital assets. You're meant to move from one wallet to another and you're not meant to be tied to one.
Neil, do you want to jump in there?
I think the idea of having your choice, right, is important for a lot of reasons. Some could be due to compliance, geographies, counterparty risk. I think that, again, in an ecosystem that you can have your choice and understand your counterparty risk could be super powerful in this. And I think for new market participants that aren't necessarily coming in to buy Bitcoin to sell it 5 minutes later when it goes up $500, but participants that are entering the space for various reasons, treasury management, hedges, against their balance sheet, all of these different things that people have started to talk about. I think they don't mind to face off with someone who they understand and that can offer best execution, so long as they do get their choice. And so I think that's one piece of the puzzle. And the other is, I think Binance US does this very well. They've got a really aggressive and a really solid order book, but many other exchanges don't. Right? They aggregate off of other exchange pools. They aggregate, various order books. I think one thing to note about the market is understanding the market participants and where there are organic sources of liquidity versus non-organic. And so if you can get as direct to the source of liquidity that's transparent, well-priced, and reduces counterparty risk, we feel really strong about a commitment to delivering that type of product.
Michael, on the subject of counterparty risk and moving assets between different exchanges, custody is such an important thing in digital assets because they're bearer assets. If someone takes them, they're gone and there's no recourse. How do we sort of get the best of both worlds, so to speak, between having that instant access to a huge liquidity pool as well as having good, solid, insured custody?
Yeah, I think this is the sort of the problem that in the heart of what we solve. But actually, just to comment on some of the conversation that happened earlier, I think that one of the things that just we see from our statistics, and I think our statistics is sort of representing maybe only the institutional segment of the market, right? So it's probably like, you know, a very different view of what sort of Binance globally sees, right? But like on the institutional side, 60% of the activity is actually done sort of off exchange, and then, you know, 40% is basically sourced from the exchanges, right? So I think needless to say that like both of those aspects are extremely important for institutional investors to be, you know, there is a really big chunk on the exchanges, but there is also a really big chunk of exchanges if we're talking about I guess, you know, best execution, although there are I think experts that have even a stronger view there than I have, but I think it's pretty consistent with also what I heard from them. Now, in terms of like, you know, the question that was asked, that you asked about how to basically solve those two things. So definitely, like, you know, when we came into the market was very much focused on cold storage, you know, back in 2017, 2018. Unfortunately, you know, cold storage in general is by design, right? Is slowed down by human operators, and it's not really sort of suitable for this rapid capability around moving liquidity, or at least like, you know, fast settlement times around the liquidity. You can still sort of maybe book the trades, but you can do settlements, you know, maybe once a day out of cold storage. And that was a huge issue. I mean, there was no good solution for people to really do it in a secure and fast way. This is where basically Fireblocks came and built the technology. And the way that we sort of solved this problem is by creating, I think, like two really unique capabilities. The first one is a secure and online custody, which was achieved through the introduction of first and foremost MPC technology that allows us to, you know, first time create this distributed wallet structure that we could create confidence that it is online, and yet there is a really strong governance model around how the transactions are being sent out of that wallet. I think, you know, MPC, you know, in the early days, there was a lot of, I think, conversation, is that the future? I think we are now at the point where the future has been determined, right? PayPal bought Curve, which was for, you know, for a long term our partners in terms of basically evangelizing this technology. So if the biggest retail player right now in the space standardize on that technology, and, you know, Bonnie here as well, and it's pretty clear that this is the future of security. And really the benefit of it is that it allows us to do online, and by the way, also Binance is using it, so that's an important fact to mention. So I think that it became a very clear answer to how do you do it secure, and yet how do you do it also online. The second issue that basically happens, and I think Neil can, you know, even talk much more to that, given their experience, long-term experience with using our platform, is that, as you mentioned, you do one mistake and not necessarily losing your key, but you're basically taking the wrong address and you're sending the assets to the wrong address, and those assets are gone, right? There is basically no recourse, and, you know, even with everything that happened in the traditional financial space, there is no even a legal recourse basically to obtain those funds. And for that, we created the Fireblocks network, that essentially it's like an overlay, or it's a messaging platform on top, or messaging network on top of all the blockchain. It doesn't replace the blockchain. All the transactions are still settled on chain. We use the blockchain technology as it is designed. We don't, you know, circumvent that using all kind of second layer technologies. But what we're basically doing there is that we are able to authenticate the party to which you need to settle the transaction to, or the wallet where you need to transfer, and that it can be an institutional party. You can do that transaction from Bonnie to BlockFills, or you can do it from BlockFills to Binance US. So we at this point we have 30 of the top exchanges integrated into the network. We have around 230 market participants in the network. So, and that really solves the operational problem, right? So before that, you basically had to, you know, get a deposit address from someone over email, send a test transfer, do a video conference with that person to basically validated the test transfer actually went through, and then to basically do a bunch of other procedures, even from a compliance standpoint, to make sure that the address actually belongs before you remit the full payment. That process could take you up to like an hour, right, for a single transaction. With the Fireblocks network, you can do it basically in 1 second. It's insured, you know that it's going through, you know who is the counterparty, you have all the compliance information, and it's very powerful, right? So we basically now, last 30 days, sell $110 billion, right, through the functionality, which, I think can appreciate it's quite a lot. So that really, so I think those two components or those two technologies are really solving some of the acute issues that sort of were at the core of the fragmentation and in the core of this inefficiency from a settlement standpoint for many of the market participants. And I think that overall, not only that they basically solving those issues for the crypto space, but they actually allowing the crypto space to perform in a much better way from a settlement and clearing standpoint than the traditional space.
Lory, I know you can't talk too much about the partnership. We did have a chat about this in the pre-panel call, but I'm really interested to hear, the view of what Michael's talking about is super cutting edge technology, at the cutting edge of finance, digital money, new on blockchains, settled instantly. It almost sounds like magic. Banks typically move quite slowly towards new technologies. How do these two things sort of fuse together for you guys?
Yeah, look, great question, James. And I think a huge amount of credit goes to my colleagues on the partnerships team, and also I guess the folks in the different lines of business in relation to digital assets. So we're constantly looking and scanning the market for partners to help us accelerate how best we meet our clients' needs. And it really is as simple as that. I'm in the bank 3 months, and genuinely, hand on heart, one of the things that I noticed is just how open the bank is in terms of partnering with other players. And I'm not trying to give you a company party line. It's actually true. And I spend at least meet one company a day, if not several, trying to understand who they are, what they do, and how we'll partner with them. And kind of coming from that sales side myself, it's pretty interesting to see, I know, to meet the companies and hear their pitch. And yeah, perhaps, pick up tips as to maybe all the things that I was doing wrong prior to joining BNY Mellon. But look, it's time it's setting aside time to meet with the companies, to understand what they do, see how they fit, see how they, fill a gap for us, solve a problem for us, how they add value based on, all the different client conversations that we were chatting about at the top of the call that the bank is having. And that's it. And then, I guess along the lines of our investment into Fireblocks, well, then we see, I guess, what are the potential opportunities on how we can work together? What does that look like, as the case may be? So no substitution for, for lots of time spent meeting folks. But like I said, I think full credit to my colleagues in the partnerships team, and also in the different lines of business that are meeting with these companies, who are focused on, creating new venues, creating liquidity, and everything in between.
Very positive sounds there. Thank you, Lory. One of the, and maybe this is pushing it a little bit, but I think one of, the demands of a prime brokerage service is the borrowing and lending market, utilizing your balance sheet or borrowing for leverage. And we've seen a huge boom in decentralized finance. I think in decentralized finance protocols now, we've got about $50 billion locked, which is around the same amount, of the total amount that's invested in Bitcoin funds at the moment. So it kind of gives perspective. You've got the institutional investment funds, and then you've got instruments, and then you've got the DeFi instruments. So I'm quite interested to hear the panel's view on, demand for these DeFi services. Let's say something like Compound, where you can deposit maybe wrap Bitcoin or Ethereum or a stable coin and generate a yield, which is really like gold dust right now in the macro picture. So who would like to take that one?
I can take it.
Okay.
Yeah, so I'll share a bit of our view on how it evolved for us. So I'm a big fan of Compound specifically and DeFi in general. But when we released our first integration into Compound, which was over a year ago, it was in February 2020. No one even, none of our customers even bother basically to check that feature, right? Actually, there is a sort of a funny story that if people will Google, they will see that there was an article on the blog that when we launched the feature, they basically interviewed one of our customers and say, this is a really cool feature, but we will never use it. Fast forward into May, basically we started to see almost like 100% of our customers asking for access into DeFi on the back of all the liquidity mining phenomenon. And then we really started to invest. So over the course of the last year, we basically released the DeFi API integration, basically web extension integration, and now also another really interesting integration to DeFi. And I want to say that probably 50% of our customers are right now taking advantage of DeFi protocols like Compound and Avi, protocols like Uniswap, Curve, and others. So it's here to stay. Now, from an institutional standpoint, clearly there are significant hurdles, right? The first hurdle was basically how do you provide a secure access, which I think that we were really able to solve, but still there is the regulatory aspect, which basically prevents a pretty significant part of the institutional market to participate in that, because not only that the guidance is not clear, but if for whom of you is actually following sort of the global regulatory news, FATF, basically the latest and greatest suggesting out of FATF actually created pretty significant hurdles for DeFi, which there is a very strong opposition to what is currently being proposed over there. Again, this is not a regulation, and they only a body that suggests sort of regulation, but definitely we are now in the middle of a pretty serious debate in terms of how regulatory this will unfold. And the regulatory question is really in the heart of how the bigger institutions can participate in that. We are actually working with a few of the protocols on things that will make the compliance and the KYC much more aligned. It's like still in the work. I think, we are looking at the end of this quarter or maybe, Q3 in terms of bringing something, I guess, exploratory to market. And hopefully, from there, the industry will be able to iterate into, I guess, the point where the bigger institutions and the regulators are much more comfortable with this technology, because it is, the essence here, right? That's the really powerful thing that is being brought to market.
If you had to hazard a guess of, which group of investors is most interested in these products, let's say the more innovative side of DeFi, is it family office groups? Is it sort of crypto native funds, traditional funds, maybe even pension funds, looking to generate a yield?
Yeah, so I'll tell you who is currently using it through our platform, and also the exploratory conversations that we have at the moment. So right now, I think predominantly it's basically crypto funds that they have strategies around DeFi. Adjacent to that, we basically have some of the prime, prime brokers are more, I guess, like, market makers that they're basically using that for, using the functionality because you can actually generate interest on over a very short period of time of basically holding the position. Then the most interesting use cases right now is that I'm sure that most of the people are familiar is that actually with stable coins, for example, on Compound over the last week, you could generate basically 10% interest, right? Which is more than you would get in any bank. So we actually seeing quite a lot of fintech companies that they're sitting on, big balances of US dollars, right? And they want to basically bring products into market in which they basically off-ramp those US dollars into, for example, USDC, and then they will be able to take advantage of the DeFi protocols to basically, I guess, just CeFi the DeFi into a service that their retail users can take advantage of. And then, I've seen banks that already made investments into DeFi protocol. They're not users of the DeFi protocol, but they basically invested in DeFi protocols. And I think the journey, at least from the banking side, we see quite a lot of interest or exploration around what that means, but definitely they're quite far from, actively participating there.
Rena, I know Binance sort of global have a huge variety of different choices for their users in terms of accessing all of these different these protocols. What's your view in Binance US and offering those services in the future, and how important is choice as a service for a user of your platform, whether it's retail or an institutional type?
Definitely on our roadmap. The hardest hurdle for me to kind of get behind on these DeFi protocols is that the yield generation really does look like an investment vehicle, in my opinion. So it could feel like a security. Now, none of these protocols are directly regulated by the SEC or CFTC, so it puts the exchange in a difficult position to what route can we take that we're still regulatory compliant, right? Because all of this is gray area for the US. You have crypto funds that basically can do the yield generations because they are not necessarily regulated fully by FINRA and such. Now, if you were to go more in the traditional hedge funds and stuff, everyone is regulated, and in order to interact, you must have a broker dealer, and then the custody still is important. Now, for DeFi as a whole, I would love to build this type of product with Binance US, but I do want to do it in a more thoughtful manner of knowing that we ourselves have our banking charter, or we ourselves have the lending license, so that I have with confidence knowing that as we custody our assets for on behalf of our users, whether they be retail or institution, we are lending them out in a thoughtful manner that there is no gray area whatsoever. We know we're in the clear, because it's really important as an exchange to maintain those pretty staunch relationships with our regulators.
No, absolutely. I'm sure we can empathize with that. It's great to have both sides. One side that can be sides, not necessarily talking about Binance Global, but an industry that isn't hamstrung by regulation, that can go out there and test the boundaries and build new products, and then for companies like yourselves to do it in a regulated way, start to understand how they fit in to existing regulation and modify new regulation, and really make them then mass market instruments rather than just sort of some short-term yield generating toys that perhaps don't have a long-term future.
Right, because we build for you as an exchange. We build for all of our users, whether you're retail or institutions, where it is our responsibility to build the product that you want to see. And if it is going into DeFi and moving assets off the exchange, then let me build it for you, because that's the only thing we can do, right? We answer to everybody who trades with us, whether it's today, tomorrow, or in the future.
Neil, what's your view on sort of getting access to different types of markets? A BlockFills openly exploring, sort of expanding. How wide do you guys go in terms of the assets that you serve?
Yeah, so we're a big part of the business to business lending ecosystem that's out there. We've been a very common institutional lender to market makers, to mining institutions, very notably on the mining side. And we stick very much so to the things that we understand very well, and so overnight margin, credit enhancement for trading, short term, call it under year lending that's run very much like a simple forward contract or something like that. These are things that very active traders in our ecosystem, they know and they like and they're familiar with, and there's a real use case for us. Many of them that want to trade, Michael talked earlier about leverage, right? And where people are getting leverage. And in our ecosystem, if we're going to build, a prime style of business, giving people access to credit is a form of leverage that they can enjoy in our ecosystem. So what we aim to do is to really pay attention to what we can learn from DeFi. That's being very widely accepted today, especially from crypto native groups, as Michael pointed out, from other market makers, and maybe do something a little bit more traditional, but also a little bit less traditional, right? Something that's a hybrid of DeFi and the traditional world that really makes sense from a product standpoint internally. That's super seamless, that fits into the rest of the products that people are participating on our platform. And, we'll take it from there. I do agree with Rena that we want to take a really compliant stance on this, and we want to understand what's not gray and what is gray. But in the meantime, we think that we can provide like a really technological piece or product piece that comes from the financial side, right? So we want to take something financial and we want to try to use technology and resources like Fireblocks to seamlessly manage risk and settlements for features that we have internally in our ecosystem. So as a longtime user and advocate of Michael and Fireblocks, we've just been able to bounce off ideas off of their team from a product standpoint that not only have they really deeply listened to, but when they've chosen to execute on any one of those products, they've done so in a very quick and reliable manner. The product is useful, it's delivered, and it doesn't break, which is really a nice feature in the technology world. So anything that we can do to leverage great ideas. What's that?
Knock on wood.
Yeah, knock on wood. Good point. Yeah, good point. Anything that we can do to take new, fresh ideas that very active participants are interested in, and experiment with those things, like in a traditional sense, but also a new generation sense. We're very open-minded too.
Okay, so we do have some questions that have come in, but just before we go to that, along that that line of thinking, Neil, and I think this is probably one for Lory. There's a lot of complicated technologies. It takes time to build these products and a lot of very niche sort of experience. So who's ultimately going to win in a world where, let's say, we start seeing securitized tokens, so everything's on the blockchain? Will we see the now sort of traditional prime brokerage providers being replaced by these innovative groups of partnerships, or perhaps single entities that are building out these services?
Look, a very interesting question. And you know what, when I started my blockchain journey, geez, I don't know, 7-8 years ago, I got really excited and probably overly enamored about what the technology can do, and thought that change would come fast. And to your point, I think Ray Amara's principle comes to mind, where you overestimate the impact of technology in the short term, but then underestimate its impact and broad changes that it can bring about in the long term. And so what I say, look, and through lessons learned in this space, I don't think the traditional prime brokerage services or prime services are going to go away. I think there's still a definite requirement for them. And I think it's also going to take, to the points that the other folks made in relation to regulations, it's going to take some time for clarity to come through. And look, I expect what we'll see is some will pivot successfully and provide services into the crypto space as well as in the traditional space. Some won't make that tradition as well, perhaps. And then, you know, there'll be folks, I guess, like Neil, like Rena, and like Michael, where they're providing services which are meeting certainly are meeting our needs based on what our clients are looking for. So I think experience has taught me as to change comes slower than you think, but it does come, and I think that's kind of the phase that we're in now. It feels, you know, gradually, then suddenly, and that's kind of what it feels like. And I think we're at that stage in the digital asset evolution story where, you know, it's coming of age. And I think there's going to be a whole pile of opportunities for folks to, as I say, to pivot, add in those services, and then also obviously fantastic opportunities. And BlockFills is a prime example of that, who's providing services of that nature. And, you know, how are they being so successful? Because there's customers at the other end. I think the final thing that I'd say, which is, you know, an important point for us as the global bank, is ultimately regulation is absolutely critical on the institutional side. So despite how, you know, fast, you know, we may want to run and move into these different areas, we need to be very, very thoughtful and conscientious in terms of, I guess, following our risk framework that exists within the bank, and also, you know, explaining what we're up to with our respective regulators and ensuring, you know, they're okay with it.
Fantastic, thank you, Lory. And to lead on from that into our first question to the panel, which I think might be a good one for Rena, which is when we're talking about, you know, corporates investing part of their treasury into the space, do they have to deal with a regulated sort of counterparty? Would they be able to deal with, you know, sort of any exchange that they choose? And so sort of how important is it to be regulated in order to give access to those types of investors?
Extremely important to be regulated. Every of the top 5 exchanges in the US, whether it be Binance US, a Gemini, a Coinbase, or Kraken, we're all regulated by the SEC and have to self-report to FINRA. On that same token, each one of us are also regulated on a state-by-state basis, right? We have to achieve money transmitter licenses in every single state in order to fully operate across America. On the institutional side, honestly, they generally prefer to come to an exchange more so than a traditional prime brokerage because of the bespoke perspective we provide. We are not a team that's kind of touches digital assets. We're only in digital assets. This is all that we know. This is all that we advise on. And I think they kind of appreciate the unique perspective as opposed to having just a fraction.
Brilliant, thank you. Okay, I'm just looking through the questions here. There's a lot of interest about DeFi, which is unsurprising given how hot it has been the last few months. I'm just having a look here. I mean, is it possible that in the future, you know, a lot of these sort of prime services might not even be carried out by companies, but may be, you know, interoperable sort of platforms that can, you know, in the same way that now we've got decentralized borrowing and lending facilities, decentralized order book aggregators and market makers. You know, how far can this technology sort of take itself?
I'll take it. I mean, I think it can get there. I mean, there are still, you know, significant bottlenecks in terms of, and I think it actually mentioned in that question, they said leaving gas fees and some other aspects aside, right? there's still significant bottlenecks in terms of performance, cost, resiliency, and other things that, you know, in the CeFi space, they are being well understood and resolved. It definitely, like, you know, those attempts in the DeFi space are ongoing. You know, from a theoretical standpoint, I think it's sort of well understood how to do it. I think the general issue over there right now is the practicality of doing that with performance that you can achieve in CeFi. There is also another aspect there, which is the credit aspect, where in DeFi in general, because everything is anonymized, right? Then right now, in terms of leverage, it has to be over collateralized, right? And you cannot operate on the basis of credit. There is a view that this also can be resolved and will be resolved down the road through basically digital identity that will be baked into those protocols. So, you know, in the future, I guess the answer is yes. How far are we from that point in time? You know, probably at the very least, like, you know, 2 years, right? Until we will see something that is materially starts to look like PB in the CeFi space.
Yes, and you had that great phrase earlier, to CeFi the DeFi, and perhaps the DeFi will become the CeFi. For anyone that isn't familiar, that's centralized finance and decentralized finance. Okay, so we have quite an interesting question about risk monitoring and due diligence. So, you know, what are some of, let's take it in two parts. What are some of the challenges that you face dealing with crypto assets from a risk monitoring perspective? And also, are some of these institutional investors really digging, you know, curious, let's say, to know what's happening beyond just I've connected to Compound and I'm getting a yield?
Well, are you looking at maybe there's more than one piece to this, you know, that's speaking to it in maybe the DeFi world, but I think that there's like an enhanced due diligence that's starting to be required from participants that are entering the space that are looking for some things in particular. So for example, I'll just throw this one out there. I've sent a couple of really very large clients that are public mining companies that are rapidly growing over to Fireblocks to learn about the compliance, the SOC 2 compliance that is required by their auditors to hold their crypto in custody, because many of them for the first time are using the strategy of holding crypto on their balance sheet because their tax preparers are allowing them to do so. And so from a custody perspective, that's one thing. Then they're saying, well, my mining pool, I do through Binance.com in Asia, and I trade on Binance.com in Asia. But my auditor in North America, from a pubco perspective, prefers me to trade on a regulated exchange, or not perhaps touch somewhere that may have a little bit of a opaque AML KYC procedure. So I think that there is an extra layer of different types of participants that are asking for different things. We've even had family offices in Europe say, just due to some very interesting rules in our local jurisdiction, we'd like to own Bitcoin, but we have a very specific purchase procedure on understanding, you know, where that crypto has come from, and, you know, where, you know, who's held it before and has it transacted on a bunch of various exchanges. There's just an enhanced amount of due diligence that we've been seeing by certain specific participants that come in and are looking to do certain specific things.
Okay, thank you very much, Neil. So here we are coming up to the hour. Before we do sign off, I had a few quick fire questions I wanted to put to the panelists. So the first, if you just had to give a number, what probability would you assign to there being a Bitcoin ETF approved in the US this year? Who wants to lay down the benchmark?
100% within 2 years. You know it's coming.
Wow, that is fantastic. Try and beat that, guys.
How can you beat that?
I think we're all quite
120%,
bullish on.
Yeah.
She's applying certainty to the situation. So
Yeah.
It's a mic drop.
yeah.
I mean, we're all bullish about this. It will happen. We all want it to happen.
Absolutely, we do. And Grayscale, perhaps the most likely candidate at this point. Let's move on to one more question. So, have we passed a tipping point for Bitcoin adoption? Is this it? Is it, is this really happening? Is it an asset class?
I certainly think so. I mean, if the goal, we hear so frequently from investors in the space that are investing in companies, right? That the goal is what we did in the last 10 years was get 100 million people access to crypto, and in the next 5 years we want that to be 1 billion. That's an interesting concept from an investor standpoint. And if you see a company like PayPal and Cash App, attempting just that to put this asset into other people's hands, I certainly think that we're well on our way to achieving much greater adoption, and maybe a tipping point, maybe not, but that seems a really solid indicator.
I think we are in the middle of the tipping point, because I think that what we are seeing is sort of the movement into beyond the trading use case, right? Beyond the speculative use case, you see, NBA teams announcing that they're going to do payment salaries in Bitcoin, or allow an option for that. You see, you see companies starting to accept payments, and create payments, PayPal with their merchant payments. So I think once we will actually move into the real world use cases, that's like clear that we are beyond the tipping point.
Michael, are you going to buy your Tesla with Bitcoin? Tell us.
I already bought a Tesla, but I'm looking forward to maybe continue paying for the lease Bitcoin. Yeah.
Okay. Fantastic. Okay, we will wrap it up there. I just want to say a huge thank you to CryptoCompare and to BlockFills for bringing together these incredible panelists, and thank you all for giving such brilliant answers throughout. I think if people want to find you, what's the best way? Maybe we could quickly just say, a Twitter or other, Neil.
Yeah, you can follow us on Twitter. I would say we're not so active on Twitter. The best way to reach out to us would be to reach out via our website. Plenty of us are on LinkedIn. Feel free to reach out. We do have a Telegram group at BlockFills Trading. So feel free to reach out to any one of us on our team. Looking forward to working with anyone in the future. And thanks to all the panelists. You guys were just truly exceptional. Thank you very much.
Rena?
Oh, I can be reached via DM on Twitter. It's Rena P. Shah, and then the Binance US handle. We do read all of our DMs, every single one.
That is a serious commitment.
We're user focused and try to be like that. So much so that my AirPods case say user focused.
Fantastic. Lory, where can people find you?
You'll find me on LinkedIn. So just Lory, Kehoe, and I'll get back to you.
Perfect. And Michael?
Yeah, LinkedIn and Twitter, we have Fireblocks HQ, and carry our website, fireblocks.com.
Fantastic. All right. Thank you all. Have a good evening, and we'll sign off here.